this new series we're doing, Crawford Masterclass. So over the course of this year and hopefully beyond, we're just going to be hosting these. Well, the goal is monthly webinars as we're able to on various specialty topics. So just keep an eye out for these. There'll be some in-persons if you're in the Toronto region. That'll be a bit more intensive, but certainly we're looking to roll these out on a regular basis on various topics. So just keep an eye out for those. And thanks for joining us again today. From a housekeeping perspective, just a couple things. We are recording this. It'll be made available. I'm told it'll even be on YouTube if you're really bored and want to go back and watch some YouTube videos of this later. We are going to try and keep this to a tight 1 hour over the lunchtime here. So we've got a lot of ground to cover, and we're gonna power through. But there is a Q&A function. So if you do want to drop a Q&A in there, we'll try and get to it most likely just at the end, just because we're mindful of time and again a lot of ground to cover. So that said, I think we've got a good chunk of attendees, so we're just going to power through here and get started. So today we're talking about advanced cyber claims handling in Canada. For those of you that may have participated in past seminars, we have done kind of a Cyber 101, a primer of sorts on key concepts and typical of cyber handling in the claims and incident response world. Today we're just looking to kind of boost that, take another step or a next chapter, and talk about some more of the trends, complexities, and what effective response looks like from an incident response and a claims adjuster's perspective. So here's our agenda for today, just to give you a quick overview. So I'm going to start with just a bit of a preamble about the Canadian market and some of the nuances here. And then we'll kick it over to my colleague Mike, who's going to talk about current cyber threat trends, common challenges we're seeing right now. Brendan's going to pick it up from there and talk about what drives severity, kind of the key ingredients to effective adjusting and incident response. And then Donald's going to take it from there and talk about some of the coverage themes, emerging issues from a policy standpoint, a bit of a dive into the business interruption side of things. Then we're going to go back to Brendan, dig into some ransomware in a bit more detail, and then we've got some real life case studies. So we want to root this in kind of practical application and kind of key things to look for as you're going through an incident and handling a loss in this space. So with that said, I'll just introduce the speakers here today. So for those of you that don't know me, I'm kind of just moderating for today's sake. So I've been with Crawford for about 19 years now, and I'm currently leading our global technical services division, which is about 100 adjusters across Canada that work in various specialties, cyber being one of them. And so I'll introduce some of the folks here that work on this team. So Brendan, a seasoned, longstanding adjuster with Crawford, specifically focused on cyber losses. He's handled hundreds of incident response and loss adjusting assignments, multinationally, several multi-million-dollar ransomware and similar losses. So he's definitely been around the block. Donald, more recent to the team, I believe you're coming up on 2 years though, is a lawyer with our financial lines and cyber team, and he previously worked as the cyber lead in-house for a large commercial insurer. So he's got a lot of expertise in that sense. And finally, Mike DeMaria, who's got a background of 20 years of IT and operations experience before coming over to the GTS loss adjusting team. So we've got a wide breadth of expertise here and some different backgrounds that are going to share their experience with you today. And so beyond that, I just wanted to share this. I promise the sales pitch is short, but beyond these three, this is a few additional assets that we have in our cyber group across the country. In particular, we've got some expertise in Quebec, and do keep an eye out. We will have a masterclass on cyber with a specific focus on Quebec coming up. So if you are interested in that, or have colleagues that would be interested, we'll be certain to pass that around shortly. So, looking now at the Canadian landscape, just again, a brief preamble to talk about some of the nuances of the Canadian landscape, and the environment that we operate in. So, the Canadian market in general, it's maturing. It's probably not as far along as some other jurisdictions around the world, but we are seeing some more sophisticated products and a lot of new entrants and a lot of increased capacity in the market around Canada. So there is a lot of competition in this space, and we're seeing some softening in that market, along with kind of a plateaued growth from what we've seen in previous years. So haven't necessarily seen, a softening on the underwriting side, but certainly when it comes to claims philosophies and the expectations in the market about the sophistication that insurers have and the resources they have for an effective response that comes part and parcel with these insurance products is certainly an expectation in the Canadian market. From a customer standpoint, the policyholders, for the most part, are comprised of those SMEs, and in that sense, they don't necessarily have a lot of sophistication. They may not have a CISO or a risk management group. They likely don't have emergency response plans in place. So a lot of the times when they're buying an insurance product specific to cyber, it's because they need those instant response bells and whistles that come with it. So when we're looking at the losses that are coming through the door and the products that they're buying, it's not necessarily just the insurance dollars, but it's also the instant response package that comes with it. So those are some of the key things from a Canadian perspective. On the technical front, we're seeing a lot more sophisticated activity on the threat actor side, a lot of innovation, a lot of AI-driven threat vectors. So that's a concern. On the regulatory side, we still continue to be a patchwork of provincial and federally regulated framework there. So that's difficult to navigate when you're dealing with multi-jurisdictional claims, and so it is really important, from a loss adjustment perspective, that we have this network in place of experts regionally that understand jurisdiction, that understand, instant response, crisis management. It really goes beyond kind of your typical day-to-day loss adjusting responsibilities. So that's just a few comments from my perspective about, the environment that we're operating in Canada and some of the concerns in the cyber world here. So we're gonna delve into those things right now, and I'm gonna pass it over to Mike here, who's gonna talk about the current cyber threat trends. Thanks, Mike.
Yeah, thanks, Rob. So what we're seeing right now is not just sort of more cyber incidents, but a lot more believable deception, faster financial harm, wider impact when trusted access is compromised. And there are really sort of 5 patterns that keep showing up, and they tend to tell us where cyber claims become more expensive or disruptive, and where they might take more time. So the first is ransomware, and ransomware is no longer just an encryption issue. In many cases, it's really it can be 3 problems at once. The insured is usually dealing with the business interruption. There might be possible data theft, and then there's the extortion pressure, sort of all at the same time. That can put a lot of pressure on the early response of a claim. The business obviously wants to get back up and running, but at the same time, there's an investigation that still needs to determine what happened and what was accessed, and whether the threat was actually contained. Second pattern we're seeing is a lot of AI-assisted sort of phishing and impersonation, and these attacks are just a lot more convincing than they used to be. The language is better, the tone feels a lot more familiar, and the requests often look pretty routine. So the problem's not always a sophisticated technical breach. It's just one missed verification step, and Once that happens, the claim can expand quickly. What looks like a simple email issue can turn into a credential compromise, a payment issue, or some kind of sort of broader response effort. The third is business email compromise and payment diversion. These events don't typically begin with any kind of dramatic system failure or hacking. They sort of begin with ordinary payment flow, vendor relationships, approval processes that just become manipulated just enough to look legitimate, and that's what sort of makes them so effective. They often, it just feels routine until the money is already moving, and then all of a sudden they notice. From a threat trend standpoint, the concern is not just email compromise itself, but how easily trusted business process can be used to sort of create a loss. The fourth pattern is MSP and supply chain compromise. And these incidents tend to be much broader because the issue sits inside some sort of trusted relationship. One compromise can affect multiple clients at once. And the challenge from a claims perspective on these is that there's often limited visibility at the outset, and there's often a lot more parties involved, and sort of timelines that are not fully within the insured's control. And lastly, we're seeing more credential theft and cloud account takeover claims. And these, often don't present like traditional malware events, which can make them easier to underestimate. So instead of obvious system damage or something, the loss might involve unauthorized email, a payment redirection, and so we often have concerns that access, threat actor access, is sort of still sitting in the environment. If the initial response is too narrow, or if the full scope of the account compromise isn't appreciated early, these claims can quickly expand. So I guess the takeaway is just early pattern recognition is really key for handling these claims. The sooner you understand what type of event you're dealing with, the sooner you can kind of shape the response properly and control the scope, and hopefully avoid any expensive or time-consuming backtracking later. So we can go to the next slide. So if the first slide was sort of about threat patterns we're seeing, this is sort of more about what tends to make the claims harder once the event's already happened. We found that cyber claims usually don't become difficult because the technology is impossible to understand. It's not really like a technology-driven thing. It's tends to become difficult because there's some recurring sort of friction points that start adding delay and cost and uncertainty. So the first is late notice after like an internal cleanup's already started. This is quite common, especially among smaller businesses. By the time they've reported the claim, the insured or their IT MSP, may have already re-imaged devices. They may have reset credentials, deleted emails, and sometimes logs have already been overwritten or lost. And the instinct's understandable. The insured wants to solve the problem quickly, or the MSP, who is oftentimes responsible for security, they want to solve the problem quickly. But from a claims and forensic perspective, it makes things a lot harder because now we're trying to reconstruct what happened after a lot of the key evidence is already gone. And that can often mean more time, more cost, and less certainty. Second issue is privacy obligations, which can create a lot of uncertainty if they're not identified early. In Canada, we have a lot of different privacy regimes. and the response can vary depending on sort of the type of information involved, where affected individuals are located, not just sort of where the insured is located, and how clearly sort of the scope of the incident can be established. So a lot of uncertainty around notification and affected populations can slow the file down or increase legal and vendor costs. The third is sort of cross-border complexity. Claim might begin as a Canadian matter, but once data or systems or vendors or customers extend to the US or elsewhere, the response becomes a lot more layered. You can end up with added counsel, added documentation requirements, and a little bit of a more careful privileged strategy, which is needed. So even where the underlying event is simple or pretty vanilla, the file itself can become a lot heavier and slower. The fourth challenge is business email compromise recovery friction. Like once the diversion is discovered, it really can often be a race against time. Recovery often depends on having like the complete transfer details, clear sort of escalation paths, and immediate engagement with the bank, and getting the right people at the bank. Oftentimes some insureds will just like call their local branch manager, and that can often lead to delays because it's probably not the best person. And so what happens is, like, if reporting is delayed, the recovery prospects can narrow pretty quickly. And fifth issue is limit pressure, leading to shallow forensics or rushed restoration. And this is sort of more applicable to sort of some of the smaller, medium-sized businesses, or businesses that haven't fully embraced the risks out there. And what happens is they might have low limits, and then there's a lot of pressure to sort of narrow the scope of the forensics and restore things quickly to keep sort of spend under control. And then when that happens, there's a real risk that the root cause is really never properly understood or identified. And without that, if they're just restoring from a backup from 2 weeks ago, there's really not a lot of certainty around whether that restore is not already compromised. And there's the potential that could lead to another claim down the road that no one would even know is actually still related to this first one. So takeaway again is like, early discipline matters just as much as early recognition. And a lot of the severity is driven not just by the event itself, but sort of what happens in the first sort of steps of the response.
Now we're going to get into what we've been identifying as driving the severity of these cyber losses. This is in Canada, but in handling some multinational incidents, we're seeing it quite a bit globally. What we've done is identify a few points that we've seen as being sort of the key contributors to a really significant cyber loss. And I'll just sort of walk through them quickly, give maybe a quick example. Some of them are a lot more straightforward, pretty simple to understand. A few of them are almost sort of trends that we've seen, but all of which are components of different claims that we've been handling throughout our time in this space, and the items that seem to drive some of the worst outcomes that we have seen, whether it be from the minute it hits our plate or sort of extenuating circumstances that have developed as we've learned more about digging into the forensics and understood more about the impact to the insured. First of which is the regulatory notification and compliance demands. Pretty straightforward. The more personal data, private data, confidential data the worst of which is typically personal health information. The more of that you're dealing with and you're doing so with poor hygiene, obviously the worse outcome you're going to have. The more likely you are to be not only targeted from the outset, but in the event the threat actor is able to gain access and impact your network and maybe get into the areas where some of this information is being stored. And the more that information poses a real risk of significant harm to the individuals whose data you're in control of, the more requirements and more that you'll be under a microscope from the regulators provincially and federally. Pretty straightforward example in this case is obviously hospitals. I mean, they're going to have a ton of data. A lot of their systems are digitized now at this point. They're keeping some very sensitive information. If they're getting impacted and their data is affected, this is going to be a driver of requiring notifications to regulators, notifications to individuals, which could lead to credit monitoring being offered, potentially call centers being established to help respond to incoming inquiries on the notifications that have gone out. And there's a lot of costs that come from obviously also the work that's required to help sort of navigate through all of these different concerns. Moves us from there into extended operational downtime. Business interruption plays a really close role, not only obviously with cyber claims and this particular line of insurance, but it's obviously an impact to a lot of different lines, and cyber claims are no different. But there's a unique issue that we typically see with these cyber claims, where if you're an enterprise that is doing, let's say, manufacturing, and you're looking at just-in-time fulfillment, or something where your margins are so thin that if there's a disruption to you in any way, shape, or form, it cascades to a whole host of downstream effects. The more that you're in that type of an environment as an operation, if you're not protected and have an effective risk management strategy to mitigate risk, for example, backup configurations, a proper security network, and even still, you're not always going to mitigate everything. But in the absence of those, the impact to a company that is in that position is far greater of a risk than somebody that extended downtime doesn't impact as much. But no matter what the situation is, business interruption components of an insured's claim is going to drive a lot of the severity. And the worse obviously the downtime is, the worse the claim outcome is going to be. We'll move from there into third-party and MSP dependencies. This is something that I think I've noticed a little bit more recently, where a lot of these businesses that have, with everything being more digitized, they're not necessarily doing everything themselves. So, they'll maybe have a contract with a provider that does all their IT and security. They'll have a contract with a provider that maybe hosts some data that they'll need to access on a consistent basis for the purposes of their operations. The reliance on those third parties is fantastic, and that's just the nature of the world that we live in. But they don't always have the same standard that you might have it as an insured, and that can pose a bit of a soft spot. And if you're particularly dealing with a third-party vendor that doesn't have a great deal of competence in protecting themselves, that obviously exposes the insured, and we've seen some incidents that it's led to a pretty awful outcome just by not being able to have yourself on top of everything on their side. It also then impacts, if there is an event, are you going to have access to all the information that you need to get the answers on what it was that took place, and how you can go about protecting yourself in the future. In a lot of situations where the impact was to a third party, they're not always going to be very open about what affected them and how they were impacted by this, which could keep you in the dark a little bit. So that's always an area to consider, that when that relationship isn't managed effectively, it can cause some pretty bad outcomes from a claim standpoint. The next one is relatively also straightforward, operational technology exposure. If there's a lot of processes have been digitized, as we know, if you're a facility or a business that leans heavily on certain operational tech, a lot of the times that operational tech can also be utilized while digitized. It could be utilizing very out of date either computers or systems that are also vulnerable for attack. But the outcome of the events that those systems are affected can, let's say, for example, a food processing facility, if you're impacted by a cyber attack and it spreads from corporate IT, let's say, to the operational technology that you have in controlling refrigeration and packaging equipment, you're obviously in a far greater risk than, say, a business that has less reliance upon that operational technology. So it's an area that we've identified as when that is a large component of who the insured is and what they do. If that's not addressed initially, it can cause some very serious concerns, not only with the impact to product, but also obviously disruption to business. And the final piece is backup failures and data corruption. So if your setup for establishing backups is not adequate to assist you in ensuring that there's the information that you are working with is protected and separate from the network, if you do end up having an impact that allows the threat actor to move laterally into the backup protocol that you have in place and corrupt those as well, you are now more at their mercy than you would have been had your backup setup have been established effectively. And so that becomes one of the most important questions that we're looking to get answers on. Is there backups? Is this something that you can quickly recover from, or at least have clear to be able to recover from? Or do you not even have those available to you? It then cascades down to, do we then have to negotiate with the threat actor about what the ransom might look like, and a whole other host of factors that needs to be considered. And we'll kind of move from there into what our role is as loss adjusters in the space. For these roles,
Brendan,
yeah.
Sorry, I'm just going to interrupt you quickly because some of my favorite claims people are posting really good questions. I know we said we wait to the end, but one of them in particular is focused on kind of loss severity. So let me just throw this at you on the spot here. I've got my own thoughts, but I think you have a good response for this too. So, e-discovery eating into limits. Where do you find the need for e-discovery is coming from regulators in terms of being as distinct as possibly on the affected individuals and therefore more descriptive notice, or is this a vendor recommendation situation? So I'm not sure if you have thoughts about what's driving the scope of e-discovery and why it's so expensive.
Yeah, a lot of the e-discovery issues that have arisen in the claims that I've seen, to my knowledge, it's not a requirement necessarily, as far as, like, it might be if the data is very sensitive, you might have no choice. A lot of the times the e-discovery is more driven by the fact that the impact to the network is so great and widespread, and the insured has so little insights into what could be in there, that they have no choice but to use one of these e-discovery vendors to assist them in picking it all apart. But and if it's a significant amount of data, like let's say we're looking at 3 terabytes, for example, a lot of that stuff is something that can be incredibly difficult for an insured to go through on their own with their own resources. But in a lot of cases, what I've seen is that, an insured is going to know their network and their systems and their data better than anybody else does. At least that's the hope. And so if you're able to kind of work with the insured to have them do what they can to recreate and go back through the data that might be in the areas that have been affected, you could help to answer a lot of the questions that you would need to pose to regulators with updates than otherwise would be required of going through the whole process with e-discovery. If you absolutely have no ability to share those insights, then you might not have any choice. But it's a painstaking process that these firms have to go through, which is what drives up those costs. And in some cases, there's data that has to be reviewed within Canada, let's say, or North America if it's really sensitive. And that becomes more expensive than, say, being able to vendor it out or farm it out to some of the other countries that can do this a little bit quicker at a little less cost. Do you have any thoughts, Rob, to kind of add on that at all?
I was just going to
No,
add
I mean,
one.
yeah, sorry, Mike, go ahead.
Yeah, just I was going to say, just especially if unstructured data is involved, the organization often will need like a defensible way to determine what information was affected and who may need to be notified. And so the vendors often recommend it so that sometimes it's really the only way to answer those questions in a messy data set.
Perfect. Yeah, no, I think you guys hit the nail on the head there. There's another great question here, but I'm just going to couch it a bit later in the discussion because I think it'll come up. So Brendan, I'm just going to push this forward here, and you can talk about kind of, key considerations for adjusting losses.
Yeah, absolutely. And these next two slides are going to move relatively hand in hand with one another. So I'm going to go pretty high level on this one, and then we'll kind of get a little deeper on what it is that we've found has given us successful outcomes in our approach to handling these matters. In particular, as is mostly the case with honestly almost all the lines that that adjuster is going to deal with, the incident triage and early guidance becomes crucial. And for cyber, it's magnified even further, simply because a lot of through lines that I've seen between property claims, specifically fire, lends themselves to the level of urgency that you need to be addressing a cyber claim with. But in cyber claims, the adjuster, in a lot of ways, typically will be the sort of emergency response. We're typically getting that initial call for an insured that hasn't gone through something like this in the past, and it's our job to identify the components that are important when it comes to these events to get the right vendors involved, and throughout that process, ensuring that we've gotten some answers around whether or not there's a concern with private and confidential information. That initial call not only checks those boxes, but it also helps to guide us in who we're not only assigning, but also who needs to be brought in as soon as humanly possible. And then it's our job to coordinate all those different vendors at the same time while we're, positioned as the eyes and ears of the insurer. The updates are going up on a consistent basis. With the speed that these claims are moving, we're getting updates to the examiners that we're reporting into, the underwriters that we're reporting into, sometimes on an hourly basis, especially if it's very early on into the claim. And we have to, in being the eyes and ears of the insured, identify the policy items that we think either are, potentially going to be a concern, indicate whether or not there's maybe limitations in coverage, and try and get those items in front of the insured, to the insurer first, confirmation, and then to the insured so that they're well aware of what the policy looks like in responding to the loss, so that we're not putting ourselves and anybody else in the position where they're giving up any rights, and that they're making sure that they are communicating fully and completely with all the different vendors. And then again, it's our job to make sure that there's that ongoing stakeholder alignment. So if we move from this slide into the next one, what I'd like to do here is just to kind of give high level update on what it is that we'll typically do on these claims, just so that everyone gets like a bit of an insight. And this will be for files that we have where we're dealing with it coming through our hotline that we've got, that insureds will reach out to in the situation in which they've identified something that has affected their business. So the call typically come into us. We'll get the notification in either from our call center or directly from an insured. If it's directly with the insured, we're obviously already beginning the call to triage. If it's with the call center, we're reaching out within 10 to 15 minutes of receiving the notification, because we know that that initial touch point is crucial in identifying some of the items that can help to set the table for a successful outcome or a poor outcome when it comes to responding to the loss. Because we've had situations in which we identify all of these areas that show an insured in a situation that's pretty sticky, but in getting proper vendors in from the outset, it's helped them respond to the loss and get an outcome that's much better than having them go through the process of kind of keeping it internal, working through it themselves, and then eventually reporting it off, at which point there's a lot of issues where we're not able to regain logs or other artifacts that we need to go through forensics and get some answers. And there might have been enough impact from the threat actor that it impacts the systems more long term. So we get the call in, we identify the areas of concern. Are you operational? To what extent are you operational? How are you impacted? What's affected? What's in those areas that have been affected? Is there potentially private and confidential information that could have been housed in the different servers or parts of your network that have been affected? And in a lot of cases, it's pretty straightforward. Sometimes the worst incidents are the easiest to triage, because they'll just say, we have no operational ability at all. We're completely down. We can't do anything. We need your help. It's our role to then immediately get vendors involved, typically from panels of either the carrier or ourselves that we've got good relationships with, get those vendors engaged. The first go-to is usually digital forensics and incident response firm. So a DFIR firm will get the first call. If we've identified personal and confidential information that is likely to have been involved, it'll be breach counsel getting in to assist with, privileging some of the correspondence that's early on in the claim with the DFIR firm, but also more importantly, helping to navigate what the notification strategy might look like or what the requirements are. Because in some cases, jurisdictionally, there are requirements that you need to get these details out to individuals of what's happened within a certain time frame. And that's where the breach counsel will obviously come in and assist. And then we're obviously relaying a lot of that information back to the insurer. What's the scope? What are the rough general damages look like, and the potential costs that we're seeing, so that we can give them a sense on what the reserves will need to be or could be. And that changes on a similarly hourly basis because of how rapid the information changes. But keeping everybody up to date on how that evolution can adjust is pretty crucial. So it's our role to assist in getting those vendors in place, helping to coordinate all of the efforts, and then ensuring that we're keeping the insurer up to date, identifying the policy components that we feel need to be addressed, putting it all together in a critical path letter that can be in front of the insured within a couple days, so that they have that for reference, but to also paper the file effectively and make sure that rights are reserved and everything is done to avoid estoppels and all the other concerns that can come from a claim that moves at such a rapid pace without that same level of detail. You can obviously get yourself in some sticky situations. So that's our job, to make sure that we're juggling that and doing so effectively. All the vendors in place are going to assist in providing the expert opinion. We just have to make sure that we're gathering all that data, sharing it with the underwriters and insurers, so that they can make the decisions that they need to from a coverage standpoint, so that the insured's informed on what is and is not potentially available to them under the policy that they have. That's more or less the high level on the early phases of it. We steward the claim throughout the entire process. The breakneck speed begins to slow a little bit as we get through maybe the first week or two, but it's more of the same. So it's making sure that actions that need to be taken are taken. Vendors are on top of things. Updates are coming quickly. And that if we're waiting on information that needs to be provided to the insurer for them to make a decision on coverage, that's in front of them as quickly as they can have it, so that we can get an update to the insured as soon as possible. I'll leave it at that for now. I'll pass it along to Donald for the next slide.
Thanks, Brendan. I'm just going to jump in and kind of, this is actually turns into a great segue. But I've got a question here from Anne. Is there a standard caveat that you send out when the insured is not taking the necessary steps? The steps that a reasonable and prudent policyholder would. I know this kind of bleeds into what Don was going to talk about from a coverage perspective, but maybe you can just talk about some of the conversations or the verbiage in terms of just making sure that mitigation and inappropriate steps are happening.
Yeah, for sure. So I think it depends on the specific incident, but for example, in cases where an exact vendor panel needs to be pulled from for costs, I think we just have to really make sure that, whether it be through email or in that critical path letter that I identified or that I'd mentioned earlier, that it says in there very explicitly that this is what's required. This is how your coverage could be limited if you don't go down the path of using X, Y, and Z. And we're communicating this to you without any confirmation of coverage, understanding that we're reserving the rights of the insurer and underwriters on a without prejudice basis as this progresses. And that obviously gets really technical. That's more so just to paper the file appropriately. It's usually easier to actually communicate how, if a claim is moving in that direction with vendors that aren't, let's say, pre-approved from a panel, have that call with the insured. Hopefully we're the ones that are assigning if there is a panel. If it's the insured, then we'd have to discuss with them how that could impact coverage if they choose to go with the vendor that they're proceeding with. And how it impacts coverage seems to be very obviously different insurer to insurer, but having it either in email or in that critical path letter within like 24 to 48 hours is pretty crucial if it's going in that direction, just so that we're very clear from the outset. If you're going down this road, it's going to impact, it could potentially limit coverage, impact coverage. We just need to let you know that right away so that you're well aware.
Yeah, thanks, Brendan. And I mean, I think even to take a step back from there, but to understand that, the speed at which we're responding to these incidents and the mere fact that, we can't confirm coverage on Saturday night when this comes in, and generally speaking, we're reserving rights from the outset. There are, policy conditions, there's policy features specific to some cyber policies that dictate, vendors and steps that need to be taken. So it's policy specific, but it's the same old, adage that, there needs to be a reasonable and prudent person on the other side taking steps to mitigate their loss. And I think that does kind of segue well.
Well,
into
and sorry, wait, before you move on,
ahead.
and even if it is moving in the direction that it should, it's still usually safe to kind of, because again, like you said, you're not going to be able to confirm coverage sometimes for weeks. The terminology that I typically use is that, as long as we've had agreement from the underwriters, they see no objection to the steps that the insured has taken thus far. Confirmation of coverage will come, with more information being submitted. And that at least allows you the ability to share that, like, look, we're in agreement, there's no issue, but, keep in mind coverage hasn't been confirmed, that sort of thing.
Yeah, pending the result of forensic investigations,
Forensics,
etc.
yeah,
That type of
typically.
thing, right? So, okay, let's dive into some bigger coverage discussions with Donald here.
Perfect. Yeah. And I think the last sort of comments are sort of pertinent to what I'll get into. Certainly, if you're handling a cyber claim and you anticipate any kind of coverage issues, you're not only obviously reserving your rights, but making the insured aware that you anticipate some issues is always a wise idea. So this slide deals with some common or emerging coverage issues that we see. Firstly, warranties. So warranties, obviously in the cyberspace, we're thinking about MFA, 24-hour system monitoring. If you're in a certain space like healthcare or government, you may see more sort of granular warranties on your insurance application. The reason we put this up there is it's now increasingly common for carriers to deny coverage based on a violation of warranties. It seems silly for me to say, but quite frankly, 2-3 years ago, what you put on your warranty in your application was just not really delved into in a claim scenario. That's not the case anymore. So it's something to be aware of. Carriers are looking at warranties much more carefully. Any type of claim scenario, you're really delving into what was on the application, and is that correct? And from a broker or an insured perspective, if you've got management or legal or risk management filling out your insurance application, they may not have the sort of full picture of what your IT environment looks like. And if that's not the case, you need to be wary of what you're putting on your application, and whether that's a sort of accurate picture of your cybersecurity. Coverage overlap, obviously always an issue when you're dealing with a crime scenario, social engineering or invoice manipulation. You want to look to a potential crime policy for other coverage. But oftentimes, insureds will have coverage endorsed on another policy. And particularly if you have a sort of small or medium-sized loss, an endorsement on another policy can actually mitigate what you're paying under the cyber policy. Usually it's not going to be big limits, but it can be quite helpful. So always a good idea in any claim scenario to investigate fully whether there's other insureds out there. Late reporting, obviously always an issue. The critical thing here from a coverage perspective is because of course, on a cyber policy, you have both first and third party coverage. You need to look at what the notice requirements are, because they can be different for your incident response and your liability coverage. So critical to sort of run down that issue. Third party and vendor originated breaches. This is another sort of emerging theme. And I would sort of summarize it by saying subrogation is now also much more sort of closely investigated in a claim scenario. And that's, not to say that people didn't think about subro years ago, but now it's much more closely sort of monitored in a claim scenario. So if you have an MSP that potentially might have some liability in the breach scenario, there's much more sort of motivation or impetus to look at that and see, can I go after a third party and recover some of my loss? And then just the last thing there, application misrepresentation, similar to what I mentioned before, because warranties are such a big issue now. It should be said that insureds and brokers should be careful on what they're putting in their application. So the next slide deals with business interruption. Business interruption, obviously, huge driver of quantum. Typically, if we're seeing big losses, a lot of it is business interruption. So this slide deals with some of the common I would say, hurdles or issues you might see in a big business interruption claim, and to sort of start out with a big takeaway or summary of what this slide is. The best advice I've heard is to sort of speak to your insured early in the claims process, get a sense of their business model, understand where they're at, and if you anticipate any sort of coverage concerns or hurdles, it's best to have that conversation early. Like once you've confronted an issue, you can sort of work through it with your insured, and it becomes a little bit easier, hopefully, if you've identified where there might be issues before it sort of comes to a head. So just to run through the points we have here, timing, obviously a huge issue in business interruption. Most policies will have a cutoff at 6 months or a year or 3 months. It depends on the wording, but in an actual claim scenario, the coverage is going to be cut off once the business is fully operational or substantially operational. The problem, of course, is with that wording, what does fully operational look like? And that could look like a million different things based on an individual insured. So again, to go back to my overarching theme, if you sort of start that conversation from day one with your insured in a claim scenario, what do you think fully operational looks like? What do you think business being back to normal looks like? Hopefully that mitigates any potential issues you have once you sort of approach the time period that you think the business is back to operational. So we flag that because it's a common issue in business interruption claims, and as I say, the best advice I can give is it's a common coverage issue, and sort of work on it in any given claim scenario. Third-party and vendor-related delays. Of course, you're always hoping to work with panel vendors or vendors that you trust. I think in terms of the cyber insurance market, we are increasingly in a world where everybody knows who the trusted vendors are. It's less and less the case that you have an insured that wants to use somebody you've never heard of. But obviously, if that is the case, you put yourself in a potential issue where if there's a delay and it's because you're working with a vendor you've never heard of or are not comfortable with, you don't want to be in that position. Contractual penalties and lost customers, again, an issue where you just need to let your insured know if you think there's going to be a coverage issue. Policies will have contract exclusions. Policies will have cutoff dates. If the insured believes they've lost a customer, you may need to have a difficult conversation with the insured that the policy coverage is not in perpetuity. You think you've lost a customer forever, but the policy coverage cuts off at a certain point. And then temporary versus permanent loss. On this particular issue, I think the best you can do is gather as much evidence as you can about your particular insured, their business model, what their revenues look like before the loss, what their revenues look like after. It's obviously the case. A lot of times you think, is this revenue lost or is this revenue delayed? Because if it's revenue delayed, should I really be covering this? Again, all you can do is sort of look to the evidence and gather as much evidence as you can to sort of make that determination. And then lastly, operating model and regulatory impact. That just sort of goes to knowing you're insured and understanding their business model. That's obviously critical in a business interruption claim scenario.
Great. Thanks, Donald. I'm just gonna, we're kind of at a 5-minute warning mark here, and I promised the powers that be that I knew how to manage time well here, but I obviously haven't. So what I'm gonna do, the next slide is just kind of about some of the key considerations around ransomware, but we're gonna do some case studies. I know we get a question here about just doing a step-by-step. So what I'm gonna recommend to the guys here is that we just jump ahead to the ransomware case study. And maybe
Sure.
Mike and Brendan, if you want to just do a walkthrough of that, that'll probably bring us to full time there. So I
Yep.
apologize, we're missing a couple things, but let's just jump to this. And if we have a bit more time, we can backtrack. But I'll leave it with you guys.
Is this the second slide for the ransomware one? Rob, can you check if it was the first
Um,
slide? Or no, this
First
is,
one
oh
is
no, that's
essential
it.
engineering.
That's
Yeah,
good. That's good. Okay. Yeah, okay. So to Rob's point, we're going to jump into the case study. This should highlight a lot of the things that we were going to discuss on that slide that was at the end anyways, and we're tight for time. So I'll get through this relatively quickly. But ultimately, what I'm going to do here is just kind of lay the groundwork for what this was. So we had a ransomware event that involved a multinational insured with operations in Canada and Europe. Claim first came to us with what looked like it was a pretty typical encryption event that affected Canadian servers, but we ended up identifying throughout the response to this that there was a second encrypted server in Europe that raised immediate questions around scope coordination and are we dealing with one or two incidents? How did that all kind of play out? Forensic work developed. It became clear that there were actually two different threat actors in this case as well that were involved, and that the different servers encrypted were in obviously different countries. Both attacks, though, had ended up, they traced back to the same compromised account and the same original breach that those credentials, I believe, had been harvested like a month prior. And I think if I'm not mistaken, they were the exact same credentials that were used and exploited. It was just two different threat actors ended up hitting this insured at almost exactly the same time. So that kind of dual approach ended up making it an interesting coverage issue that we'll sort of get into as we go here. But an added component to this one was that the insured could not safely rebuild parts of its legacy system exactly as it existed before. So it brought to question, what does betterments look like? How does that apply? Is this restoration, or is it a broader modernization of the actual insured system itself? And so I can't remember exactly what the size of the ransom was in this case. It was certainly multi-millions. I just can't remember the exact number, but I'm going to turn it over to Mike to kind of get into some of the next steps on this one. That just gives you a ground level view on what the details were of the insured themselves.
All right. Well, yeah. So from the start, this file really required a lot of coordinated response and sort of a really clear understanding of how the facts were developing in real time. So lots of sort of meetings, twice a day, often meetings. And the early focus is on stabilizing the situation, engaging the right experts, and keeping the investigation moving in a structured way. While the full scope was still not even determined yet. And then as sort of forensic findings develop and issues sort of become more nuanced, what it looked like two separate events were just one. And then that shifted the analysis towards the underlying breach rather than how much how much damage was actually occurred. This case study it's a good example of how cyber claims often evolve. The initial challenge being understanding and managing the event as it unfolds, and then later challenges applying the policy to sort of a more complete factual record. Because oftentimes, even at the start, even if you can confirm coverage on some things, it can evolve as you get more information and more forensics. So Brendan, you can guide them through the.
Yeah, so I'll break down sort of like a timeline of pretty much what had happened, what we did, how we responded to this one. So it first came to us, got a call from our hotline. I think it was either, might have been a Friday. It was either a Thursday or Friday. It was close to a long weekend from what I remember. As they seem to be, like threat actors like to know when to kind of disrupt everyone's weekend, but or holiday. But get the call, it came through. Notification is provided to us. We're given the insured representative details, high level overview of what had happened. So, I think it was within 10 minutes of getting the notice, we immediately give a call to the insured. On that call itself, we're doing our initial triage, running through what had happened. They informed us that it was specific to the core finance and document management server in Canada that was affected. The access had disrupted a lot of their functions. Systems were unstable. They had very little clarity on what had happened or whether the threat actor was still involved. So, I mean, when you have that, those details typically will kind of touch on privacy concerns shortly thereafter on the call. But the minute that you have those updates, for sure that the first place that you're going to is a DFIR firm to get them engaged as quickly as possible, because the biggest concern is that threat actors still involved and that they're still able to further their attack on the insured. But we received that call, we do the initial triage. We had touched on some of the concerns that there were relating to potential private and confidential information that was also locked up in some of the servers that were affected. So we made sure that breach counsel was going to be engaged as well, and they were all going to be doing so under statements of work that they'll present to not only the insured, but also courtesy copies to ourselves, so that we can make sure that we're keeping the carrier informed. In this case, we were the ones that were identifying and bringing in the vendors, so we knew it was coming from panel. There were no concerns from that perspective. And scoping calls take place usually within 30 minutes to an hour of when that initial triage call takes place. At the same time, we're looking to try and secure policy details from the insurer if we're able to. In most cases, we're not when it happens, when this one did, until sort of Monday. So we're always very careful about how we're communicating with the carrier or with the insured, and how the process occurs to develop when it comes to the involvement of the vendors, making sure that the insured's aware that they got to act as a prudent uninsured when it comes through the process, and in doing it in an effective way. You're not being super robotic and technical, but you have to make sure that they're well aware of, like, look, we're not going to be able to confirm coverage. We don't even have a policy, but we know that, your particular insurer has a vendor panel, or we're pulling from ours that's been pre-approved, that are going to be helping you to respond to this. The most important piece is mitigating the loss. So getting all those vendors into place. Scoping calls take place with, in this case, it would have been the DFIR firm. Breach counsel would have been on that to help provide a little bit of privilege on maybe some of the details that come from that. But most importantly, it's getting on top of how can we make sure that the loss is mitigated, the issue's been addressed. There's no concerns from the threat actor being able to further their attack. It's now more a matter of, okay, let's preserve the items that we need to make sure that the forensic piece can continue without any concerns, and that we can then start to look at restoration, because in this case, it was a significant impact to initially just the Canadian operations that we were looking at a very big downtime. So that initial triage allowed for us, like I said, to get the right vendors in place, and make sure that we're keeping up with that coordination. Throughout the process, we're usually sending off email updates to the insurer or whoever it is that we report into, so that they're getting a rolling update and the files papered effectively. This one is particularly interesting because it moved beyond that standard ransomware scenario pretty quickly. It looked like I said, it initially looked like the isolated event was just to Canada, but then the further involvement of DFIR and they're doing their digging, it raised the complex issue of impacts to their European servers and operations. And so there had to then be the involvement of those parties, at which point the examiner that we were reporting into was very much so engaged, so they could help to facilitate the assignment of those vendors that were going to be assisting from that standpoint. But it was the coordination that we then had to do of all of those different parties to help navigate them through getting in place, keeping everyone on the same page, and then making sure that the policy items are addressed and hit throughout the entirety of the process. And you're then managing double the amount of invoices and costs, and that as the eyes and ears of the insurer, we got to keep a rolling tally of this and make sure that we're on top of having all of the scope of works, the statement of works, and everything else that's related to invoicing, so that it's being again documented effectively. And Mike, I'll let you kind of jump in here to take it from there to help build it out further.
Okay. Well, being somewhat mindful of time, I'll try and keep this short. I'm going to cut out what I was going to talk about, whether it was 2 incidents or 1. It basically just we're able to trace back with the forensics the sort of early suspicious activity that both attacks came from, and so the way the policy worked, that we could sort of show that this was just 1 incident with 2 threat actors. The second sort of coverage issue involved restoration costs. So towards the end of the claim, when the insured was moving into sort of recovery, a simple rebuild, they had like an old legacy environment, and so rebuilding that wasn't really realistic. A lot of the infrastructure was outdated and not segmented well, and difficult to redeploy safely without sort of carrying forward some of the same vulnerabilities. So the insured wanted to rebuild into a cleaner and more secure cloud-based environment. And so it kind of raised a little bit more nuanced issue with betterment in the discussion. And so the question was not whether replacing the environment was better than what existed before. It was sort of more whether the proposed work represented covered restoration that was reasonably necessary to return the business to operation, or whether it was crossing into strategic modernization or betterments. So our role was sort of to help separate immediate and necessary costs of safe restoration from broader enhancement costs that are probably better categorized as forward-looking improvements. So rather than sort of treating it as one big giant, no, that's betterment, we work with the insured and the vendors and the insurer to sort of break the work into different categories, looking at costs directly tied to recovery and reconfiguration and secure redeployment, and getting the business back online, as opposed to some of the more elective architecture improvements that could sort of be considered maybe later on in the claim. But this helped the insurer have a sort of a more defensible and practical indemnity position, and allowed the claim to sort of progress without becoming stuck in like an all or nothing type debate. So I'll sort of leave it at that.
Yeah, great. Thanks, Mike. I know we're running a good 10 minutes over, so I think we'll just leave it there. There'll be more of this to come. Like I said, recording will be circulated and there will be some, I believe, the slides as well. And we'll have a white paper on the back end of this that'll be circulated in the market as well. So thanks everyone for joining. Really appreciate it. Hope it was helpful. Appreciate any feedback. And if you do happen to be attending the Net Diligence conference upcoming, we will certainly be there. So thanks everyone for coming.